Hey, entrepreneurs out there, got some tips for you. Look, I'm not an attorney, I am not an accountant. The information that I give to you today, I want you to fact check that with an attorney or an accountant, a certified public accountant. Fact check it. You can also fact check some of this information with a tax preparer if you believe that they give accurate information. It's up to you to do your due diligence. So let's talk about whether or not you should pay yourself as an owner of a security company or investigations company. That decision is a business decision that is based entirely on you. You're the one that decides that. But if you don't take a salary, your business will not on paper look profitable for whatever years you decide not to take any type of profit. Let's just say you own your business for 5 years, and on the sixth year, okay, sixth year, you decide to sell your business to somebody, security or investigations company. They're going to want a financial breakdown, a financial audit of all your records. They want a profit and loss statement as well. But in order to convince them to buy your business, they need a full accounting of your records. If the first 5 years, if you broke even, and then all of a sudden you're trying to sell them the business, guys, it'll show, yeah, on paper it'll show that you're bringing in $500,000 of revenue, and I'm saying 500,000 because I talked to some of you who that's how much you guys are bringing in, $500,000 revenue. Yet you decide not to pay yourself. Okay, you decide to put all that money towards operating expenses and other stuff, and therefore you zero out. So yeah, you're bringing in $500,000, but you're zeroing out. You're not making anything. You're not paying yourself. So it doesn't look good all the time. It's common for the first year that you're not being able to pay yourself. The second year, I've had years where I was able to pay myself, and then years where I was not able to pay myself. But I don't. There's no business that I am planning on selling at all. So if you intend to sell your business later on, just make sure that you show that your business is profitable, and you do that by being able to pay yourself. Now, don't be paying yourself at the expense of employees. So don't give yourself all this money so that your employees are trying to survive off of bare minimum wage or whatever you're paying them. Don't give them cars that break down all the time, so you can make more profit. And obviously, get something that's dependable that won't put your employees' life at risk. But there's a cost benefit analysis that you have to put into this. In California, and if you're in another state, find out if you're able to transfer your professional license, private security or private investigations. If you are able to transfer your private investigator license or your private investigation license to somebody else, which will be rare if you're able to do that, um, then you could just transfer again your license, and everything that you work for, it will easily transfer over. Now, in California, there are companies that are bought out. But what you're really doing is you're getting the contracts reassigned to somebody else, and that person just barely coming in and replacing the previous security company. That new security company has to apply for a brand new license. A brand new license. So all what you're really doing is you're not selling really the business. You're selling the ability to continue contracts with the current client. And remember, your client is not obligated to continue with this new party, that's buying your company. They're not obligated to go with them unless they agreed previously to accept a contract assignment. So in your contract, what you would write is something to the effect that in the case that you're not able to perform or your company ceases to exist, the person who is purchasing your company or who is um, taking the name of your company, so to speak, that person would be responsible for maintaining the contract. You have to put a clause in that. Otherwise, when you leave, the company because you were bought out, the client doesn't is not even obligated. And if you represent to the buyer of your company, or really the buyer of your contracts, you represent to them that with all the money they're paying you come the contracts, and that's not the truth. That's called misrepresentation. That is a civil equivalent of fraud. Okay, you can't do that, and the contract between you and the buyer is going to be a void contract, and you're gonna have to pay for all their legal fees and any other penalties. Let me know what you guys think about this video. You guys have any ideas, tips? Do you guys have more questions to ask of me? For those of you wondering, what do you mean, Sean, by zero or operating at a loss? Doesn't make sense. So let's just say the standard for private security, I mean, you guys are out there getting Chevy Impalas, Crown Victorias. I mean, they're kind of out of date, but some of you are still buying them. The Ford Explorers, the Tahoes, maybe some of the Durangos. But let's just say you create your patrol fleet based on those vehicles. You could run your company like that, okay, which is maybe within budget. But you can also run your company with, we'll say, Bugattis, Lamborghinis, Escalades. I'm sure I'm forgetting a luxurious car, a McLaren. Okay, you're making your patrol fleet with full of those cars. Okay, you could do that too. The IRS does not. I don't work for IRS. I don't represent them. The information I'm giving you, got to fact check it. The IRS doesn't. They don't control. They're not supposed to be controlling how you do business. So if you make the wrong business decisions, so if you're buying a Bugatti instead of a Nissan Sentra, okay, they can't just come back at you and say, hey, you know what, you're wasting your money. You're going to be liable for this amount of taxes. You should have got this other cheaper car. There's no need for this car. No. You're able to operate your business in a financially reckless manner, so to speak. Okay, as long as it's your own business and you're the only one being affected by it. Politicians do it all the time. They have all this money to spend, and they spend it recklessly. Sometimes, right? Okay, sometimes recklessly. Even the IRS. Okay, they get millions and maybe even billions of dollars coming in. Do they spend it recklessly? Well, that's up to you guys to decide. Okay, that's all I have for today. Be blessed and take care.